a twofold question. Are you positioning for higher inflation, and how do you do that in emerging markets?
I'm positioning for higher devaluation because I define inflation as a devaluation of the currencies, whether it's the US dollar or with any other currency you talk about around the world. The amount of money that's being printed is incredible. And of course, that means that you're going to have higher prices, which is measured by inflation. As you know, in my book, The Inflation Myth, I really think that it's about money rather than prices of goods and services, because the money printing is really creating this incredible rise in prices of goods and services. The good news is that technology is creating cheaper and cheaper ways to get goods and services with the money we have, which is very, very good. That's the reason why I believe we're really in a deflationary environment.
Okay, so the two factors are sort of cancelling each other out a little bit at the moment. Mark,
Right.
What therefore kind of rate of inflation, sort of depreciation do we end up with? Because society will be okay with kind of 3%. It might be okay with 4% inflation. As long as we don't go back to the kind of late 60s, early 70s, then society probably is going to be okay with a little bit of inflation. In fact, central banks have been trying to engineer inflation for really quite some time.
Well, the good news is that wages and salaries are going up in line with the rise in prices. So you have this inflationary situation with the printing of money. And by the way, money supply increases probably in the range of 20+%. So, I mean, you really could expect that kind of inflation if you measure it by the normal measures that we're using now. But what I'm saying is that the reality is that our wages and salaries are going up, and technology is bringing prices and costs of many goods and services in line with what we're earning. So it's something that we have to look carefully. But the bottom line is that people have to be invested in equities, in companies that are going to raise their prices in line with the increase in money supply. So that's very, very important for investors to remember and to be diversified globally into these stocks.
So, Mark, can you give some perspective on sort of what industries then and what countries that you're going to be most exposed to with that thesis?
Well, for us in the emerging market arena, we're looking at companies that have a good return on capital, over 20% return on capital, and companies, of course, that are in innovative industries. So we have a heavy weighting in technology, both the software and the hardware sides. And we're looking at companies that in the traditional industries that are adopting technology to improve their earnings. So, for example, if they're fast food and they're like McDonald's, as you know, is engineering a lot of new technology for their business, that's a very good sign.
Okay, just to be clear, so are you investing in technology companies? Because technology companies are being hammered. Technology companies have duration risk in them. Or are you investing in companies, every company these days is a technology company. Every company is imbibing technology and using it to improve productivity. Can you just be clearer? Are you investing in technology companies or those that are using the technology more effectively?
Both, but you must remember that we've seen this big decline in Chinese stocks because of Alibaba and Tencent and companies like that that are being hit badly. We're not investing in these companies because of the political risk. Instead, we're going to Taiwan to look at the fabless companies that do semiconductor design and manufacture. Of course, they have been hit as a result of the technology hit that we've seen in China, which brought the emerging markets.
Well, they have, Mark,
down.
but don't they also,
temporary.
Mark, don't the semis also carry the geopolitical risk because of the China-U.S. kind of face-off with chips that then kind of spreads to Taiwan?
I don't see that happening. I think Taiwan is safe. Yes, there's a possibility of some risk, but I don't see that happening at this stage of the game because both countries need to have a healthy Taiwan. Of course, China would like to take over, but it's not in the cards at this stage.
Do you worry that the semiconductor sector's had a really good run? There was some data on the terminal, I think, a bit earlier on, which I was reading through. I'm just trying to recall exactly what the numbers look like. But the market is getting very short of the semiconductor sector at the moment. Do you want to own the semiconductor companies, or do you want to own, for instance, the lithography companies, the company that make kit for those businesses as they start to expand. I'm wondering where on the value chain you want to be, and do you worry that the pure play semi stocks have got a little bit too pricey?
Yes, if you look at TSMC, you've seen the prices come down dramatically because of this hit to technology starting in China. But then if you go down the scale, and we're going into medium-sized companies that are supplying the software and the design for TSMC, who are the people that are producing the actual semiconductors, the chips. So those are the companies that are not going to be hit so badly because demand for their services will continue. And as you know, there's a continuing shortage of semiconductors. So it's unfortunate, of course, that TSMC was hit, but it wasn't because of TSMC, but because of the technology sector generally that's been hit.
All right, let's go to other areas that have pricing power, Mark. You've been bullish on India, particularly with consumer-exposed stocks. India is getting hit very hard with the variant. They have different lockdowns all over the place. I mean, how do you invest in India right now?
Well, you know, we're really surprised that despite all the bad news about COVID in India, our stocks have held up and the index has held up pretty well. It's been moving sideways. We're focused on the medical area, medical testing and that sort of thing, and also some of the infrastructure companies that are doing pipes and that sort of thing that are needed for infrastructure. Because, as you know, India is spending a lot of money on infrastructure these days. So we're kind of pleased that India has not been hit. The stocks have not been hit as a result of this bad news about COVID.
Mark, a lot of people are spending money on infrastructure at the moment. And one of the things that we're seeing happen is that commodity prices are going through the roof. We're starting to see that maybe fading a little bit today. China's now starting to push back pretty hard. Do you see commodity prices topping out here? Do you think they go higher? What impact do you think that's going to have on your investment thesis?
I think they've already had a run, and I don't think you're going to see much more because, as you mentioned, there'll be resistance. We're, for example, very interested in copper because copper is used in semiconductors, and a lot of companies, of course, have seen their costs go up as a result of higher copper prices. But I think that's going to be coming to an end as the supply is beginning to feed the demand.
Last question, Mark. Do you buy Bitcoin?
No, not yet. I'm buying gold.
You're buying gold. Okay. Is that your inflation hedge?
That's my long-term hedge for everything.